Good afternoon and welcome back. My name is Guillermo Torres. I'm manager at Axis Corporate, and as a panel captain, it is my privilege, it has been my privilege to help organize this discussion on how blockchain will transform the digital economy. So please welcome our moderator, Christian Catalini. Christian is the Fred Kane Career Development Professor of Entrepreneurship and Assistant Professor of Technological Innovation, Entrepreneurship, and Strategic Management at the MIT Sloan School of Management. Christian is also the principal investigator on the largest social science experiment involving blockchain technology, the digital currency study, launched in 2014 by distributing Bitcoin to all undergraduate students at MIT. So please welcome Christian Catalini.
Thanks, Guillermo.
Thank you.
And thanks for all your work in making this happen. Hi, everyone. Welcome to this session on blockchain. The objective today is to demystify a lot of what you heard in the press, both the good, the bad, and the ugly. But I'll start with one point, which is, why does this matter? Why should every one of you start thinking about this space? What are the opportunities? How should you think about the problems that you're facing every day within your organization in terms of fit for what's coming out between startups and big players, incumbents in the financial space and beyond, that are thinking really hard about what does this allow us to do that we couldn't do before? I think the cover of The Economist nailed at least one of the key aspects of this new technology, and it defined it as the trust machine. Now, the key issue is that the way computer scientists define trust is different the way economists think about trust, which is also different the way that regular people think about trust. So I think today we'll try to give you an algorithm for thinking through different potential applications. Do they make sense or do they not make sense for what is out there? So what is the blockchain? I'll try to give you a really high-level overview of this. Like the name suggests, is a chain of blocks. Not surprisingly. And those blocks can contain different records. Think of them as transactions. Transactions that could represent digital goods, physical goods. A currency happens to be one implementation of this. You may have heard of Bitcoin and why it was so successful originally in illegal markets online, which are markets that are permeated with what economists would call all sort of issues like moral hazard, asymmetric information, and trust, broadly defined. What brings this technology together is really a clever mix of computer science and economics, game theory, incentives for the players of the ecosystem to play by the rules and keep this ledger appending over time in a very consistent way. A key feature of this distributed public ledger, which is a giant ledger distributed and replicated over multiple machines, is that it's extremely difficult to tamper with it once things are recorded in it. So you can think of all kinds of use cases in accounting, in finance, in transfer of value, titles, and so on. Why people like me find this interesting is because it's really the intersection of three fields that haven't interacted yet as much. On one side, of course, you have computer science, which is bringing in the clever cryptography, but also how economists like me think about market design, how we match demand and supply, how we match different users, how we create reputation systems on the internet. And finally, the law. Contracting, which is one of the fields that has withstand the pressure of digitization for quite some time. And we have an amazing group of panelists that I think will allow us to dig deeper into some of the prospective applications. I'll touch just on a few, just to give you a sense of the spectrum. You want to think of the blockchain as a general purpose technology. Think of electricity, think of the internet. We're still exploring potential use cases, and I think the big contribution will be more on things that we can do today. Not just in replacing and making current transactions more efficient, things that we already know, but in creating new types of platforms, new type of exchanges that we haven't even thought of yet. So the low-hanging fruit is around how you transfer value, how you transfer information in a secure way over the internet. Think about finance, accounting on the fly, where you can have audit books and reconcile books in a very quick and automated fashion. Micropayments, maybe not so much on the user side, given that we know from our literature in behavioral economics, users hate micropaying for things, right? But on the business side, B2B, when you think about licensing, DRM, all sort of information sharing, tracking usage can be actually very powerful. New types of platforms. The internet brought intermediaries like eBay and later Airbnb or Uber. Digital currencies have the potential of changing the balance of what those intermediaries do every day and the economics underlying those business models. Identity and privacy. Today, every time we engage in a transaction, we are leaking information about us, be it our social security number, our credit card number. There's this leakage that happens because we want to get something done, buy a good or open a bank account, and we are asked to reveal information about ourselves. So we have lost control of our data. Blockchain technology can essentially change that balance back and give us control over our data in the future. New forms of intellectual property and smart contracts. So machines, Internet of Things devices would barter for resources from electricity to bandwidth to information. And we'll create better systems because of it. If you project further into the future, I think the classic example is your self-driving car on a highway in the morning, you're trying to make it to a meeting, and you're buying up lane space from the cars around you in a totally seamless fashion. Now there's a marketplace created by a digital currency behind the scenes. So I think going back to basic economics, the Nobel laureate Ronald Coase won the Nobel Prize for a very simple concept. There's transaction cost in the economy. And those transaction costs define the boundaries between what do you want to keep in-house within a firm, within the boundary of an organization, and what do you want to use the market for. The market is more efficient. The market is faster. There's competition that fuels innovation. But of course, there's all sort of market failures. Therefore, firms like yours have to incorporate a lot of those activities in-house. Blockchain technology will redefine the boundaries of the firm. Some contracts that were in-house will be able to be ported outside. And that's probably the biggest change that you will experience in the next 10 to 15 years. We brought a very diverse panel, and I think they will give you a broad perspective of this phenomena. We have Anders from Circle. They're one of the startups that is really rethinking from the ground up what would be a payment system look like in a world where blockchain is at scale. Peter, who is a thought leader in blockchain and related fields. Simon from Intel, who is actually thinking about how do we push technology, the hardware, the machines, to do some of the things that are making blockchain such a powerful system. And I hope you'll be able to tell us a little bit about where they're pushing the frontier there. And Matt, which is an entrepreneur, and he's thinking about this from the perspective of developing countries, places where even identity is a major issue, and payment systems are much more less sophisticated than here. In those countries, you actually have the opportunity to leapfrog a few generations, like it happened with mobile. And so without any further ado, I really look forward to hearing from our amazing group of speakers. Please join me in welcoming here at MIT today. Thank you. So I will try to, if anybody wants to send questions over Twitter, you have my Twitter handle. I'll try to skim for it and see what happens in real time. We'll have the mics open shortly. But before we start, I'd love for our speakers to briefly introduce themselves and tell us a little bit about their relationship with Bitcoin and blockchain in general. Anders, why don't you start?
Sure, thank you. So I'm Anders Brownworth. I work at Circle, and Circle is a person-to-person payments provider. It's direct to consumer, and the blockchain permeates absolutely everything about how that system was built from the ground up. So we're active users of blockchain day to day.
My name is Peter Nichol. I focus on digital and innovation as it relates to sustainability for CIOs. So I think everybody knows that they have to innovate somehow, and trying to find what that correct path looks like is really where I specialize. Most recently, I joined PA Consulting Group and focus on innovation within PA, and also write for CIO and contribute there. I think from what the impact of blockchain is going to have, we're going to start to see wide transformation, and I'm pretty bullish on this. It's going to affect everything from the clothes you wear to the food you buy to the products that you consume. The whole consumer experience is going to change. Now, that's not going to happen within the first year, of course, but it is ultimately going to happen. So I'm excited to chat about it today.
I'm Simon Peffers. I'm a software architect at Intel. I work in the data center group at Intel. So one of the things my group is responsible for is identifying emerging workloads before they're a big workload, And we go in and understand the workload, we characterize it, we run it. We try to understand the really fundamental functions that they're doing such that we can go optimize our software, our silicon, and get changes out into the hardware ahead of time so that by the time these go into significant workloads, we're optimized to run them well, right? So Bitcoin is one that or blockchain rather, is one that we're looking at. We've been looking at it for over 2 years now. And so my group is looking at that. Beyond that, Intel participates in the Linux Foundation Hyperledger Forum, where you may have seen we recently open sourced our modular blockchain framework called Sawtooth Lake, and a new consensus algorithm called POET. And we also participate in the R3 consortium of financial institutions, and we participate in the pilots there. And beyond that, we have other POCs that we run that are less visible, and we're always looking for interesting collaborations. So if any of you have good ideas there, I'd be interested in talking later, or you can follow up by email.
Great. I'm Matthew Utterback from Mercury, and my perspective is driving digital payments and digital currency use in developing markets. And today, around the planet, there's 2 billion people without bank accounts, without credit cards, which also means they don't have access to basic financial services like insurance and loans through credit. And those people do have resources, and in fact, it's one of the fastest growing segments of the world economy. And they're also connected. In sub-Saharan Africa, where we're starting work, there's 370 million people with a mobile phone, and there'll be 500 million people with a smartphone by 2020, which used to feel like it's far off, but it's only 4 years away. So there's 100% year-over-year smartphone adoption growth. And since 2015, we've been running a private beta to drive digital payments use with a particular focus on school fees and tuition, which after food is the number 2 expense for families in the developing world. And what we found, which is really encouraging, is that there's real-world measurable benefits for these people to move to digital payments. Interestingly, the number one benefit that we get feedback about is a durable payment record, essentially a digital receipt. And those receipts, those transaction data, is what we're experimenting posting to the blockchain. Beyond that, we can use social media and messaging, even text messaging, to help those people request payment from family members and other helpers, which is a very traditional, people receiving resources from their families and extended trust networks is a very traditional behavior. So we're using technology to increase the trust that people have that the money that they're sending in those networks is going for the intended use, in this case going for the school fees. And then we're expanding that to what we think of as crowdfunding. Beyond that immediate family network, for international remittances and even donors, small private donors who are giving money to individuals, but also large public sector donors. So again, it's really encouraging to see that this technology has immediate real world impact. And I think more importantly, we can think of all these great things that might happen in the future, but for us, if we can't get people to adopt it, we can't get to do those things. And we're really starting to measure and track and discover what those benefits are on the ground to adopt these technologies.
Thank you. So I'd like to start with something difficult, because I think the elephant in the room is, how is this different than a database, right? So I think we had redundancy and all sort of distributed systems. Why is the blockchain any better than what you can do today? And in which cases is it not? Anyone wants to take this one?
Well, it's slower.
Right.
It's less efficient to have a copy of everything everywhere. This makes no sense in the world. Why are we talking about it, right?
Right.
So I think you have to look at the reasons you would make those compromises to get something like that, and all of it has to do with providence and how you taking data that you're sure happened in a certain order in a way that can be done without requiring any trust amongst the players. It's not necessarily how it's always used, but that's where it's most valuable. I don't know.
Yeah, I would add in maybe I think good applications where normal distributed databases can't apply or don't apply well is in these lower trust environments, particularly where you have a lot of entities. Like you could have thousands of different players who all want to see the same view of data. That's very hard to do with a traditional database, and so blockchain comes in and addresses that problem. But just to sort of reiterate, I think there are things people are looking at to apply blockchain that could be done pretty well with traditional databases. So we have to be careful to pick the right problems here.
I'll chime in. I think part of it is, looking at the broader impacts and how fundamentally some of the changes will occur. And I'll give you one example. Just in terms of the banking and the financial audit perspective, I think most are familiar with like the 2010 Haitian earthquake that was magnitude 7, right, and had impacted 200,000 folks. And Red Cross scrambled pretty quick, raised 500 million, 488 million specifically. But when even as recent as 2015, when CNN did some of their assessments, only like 6 actual structures, permanent structures, were ever built. So did all that donation and funding get to the actual relief victims? No. And in parallel, on January 8th, there was a hackathon in Shanghai focused around blockchain, and Deloitte participated, the Rubik's team. And one thing they came up with was a global distributed ledger. And what it allowed, what the capability was, is it integrated SAP, Oracle, and other distributed systems on the financial side to provide a record that could be audited from both parties, from Deloitte's perspective. So if you kind of go back to 2015 and said, okay, if Red Cross had that applied technology, would there have been would lives have been saved? And if you kind of go up a little bit farther and say, okay, what's that impact look like on the global economy? And the Association of Certified, Auditors, audit examiners said that 3.7 trillion or something like that of fraud occurred globally against the GDP 5%. So maybe there's some impact there. And if we go back to the little United States in the perspective, maybe when we kind of look at it, we could apply it to other things like Medicaid or Medicare. Or what if all the beneficiaries for Social Security were all through the blockchain? Would there be less fraud? Some of those impacts and some of those examples, I think, help illustrate the value of the blockchain.
And within a firm, how should firms think about what they do on a day-to-day basis? What kind of activities do you see kind of coming and fitting into a blockchain paradigm versus not? I know it's a difficult one, too.
I mean, frankly, there's not many right now.
Right.
The blockchain has been pitched as this thing that fixes all the problems in the world, and frankly, it just does not. If you're trying to run a financial organization, I can see I'm direct proof of the fact that it can touch every single bit of it. But that doesn't mean that exists in those opportunities exist in other areas. It's broadly along the things that we're talking about here. The things that require some kind of a time-ordered transaction or the ability to for many parties to see the information in an open manner, interoperability, these kinds of things lend themselves.
Right, and so I think it comes pretty clear right away that the protocol aspect, so the fact that you can interface with other organizations that may not trust each other all the time, reconcile information across different silos, is kind of one of the defining features. You may have heard in the press, this is another one of the hype surrounding blockchain that I think we're hoping to demystify with this panel, this distinction between private and public blockchain. So Bitcoin was kind of the first incarnation of a totally permissionless blockchain, so anybody can join and can kind of participate in it without any vetting, without any anti-money laundering or know your customer compliance of any type, with all the issues that entails. But now you're hearing more and more big consortiums of financial institutions, intermediaries, trying to build private blockchain. So I'd love to hear from the panel, what is the distinction between a totally open and permissionless blockchain and a private blockchain? How should we think about this different beast? Can they coexist? Are they substitutes?
So I'll jump in again. Remember back in the 90s, there was the web, and isn't this going to be great? It's going to change the world. And, businesses really didn't see that much, but the intranet, that's where it's going to be, right? Fast forward to now, has the intranet changed the world as much as the intranet or the internet or the web has, right? Nobody's talking about an intranet. That's kind of like what a private blockchain would be if you are trying to take advantage of that distributed trust, right? You trust all the people around the table anyway. We all have a contract with them. So, do we what do we really gain from using a blockchain here? There are some marginal gains, but it's not the huge win that you get in a totally trustless environment, or let me say a differently trusted environment.
Anyone wants to comment on the cost of this? In terms of like privacy or like speed or?
I mean, I think there is a use for a private kind of blockchain. It really depends on the problem space. I mean, you may be right that internet versus internet, right? That the public blockchain is what's really going to be the transformative thing. But I think there's a space for smaller consortiums of organizations that want private, it's not fully trusted between the parties, but they know who the parties are, and they want to control who's participating. And they may have other requirements that a public blockchain doesn't support, like number of transactions per second, or maintaining privacy, or things like that, or auditability that you can provide on a private blockchain. That maybe it interacts with the public blockchain in some way, but it's a more specialized instantiation of a blockchain. And I think those can still lower friction between companies doing business together.
I think what's interesting for someone approaching this space for the first time is that there's some trade-offs. So private versus public, permission versus permissionless. There's all these choices that I think players from startups to incumbents are still trying to figure out. And we're seeing a high degree of entrepreneurial experimentation. Different firms are trying different approaches. And to some extent, I'd love to hear, do we need the distinction to be like all in one direction or the other, or can you imagine the systems to coexist and co-evolve over time?
They absolutely have to coexist. I don't mean to say that there's no space for it. It's just that it's a very, very different space. They will coexist. People are building it right now. So that's the reality of the world that we live in. That's not to say that there aren't ways that you can make them tie together in a public way that's actually very interesting, tagging one blockchain to another. That's actually really interesting. You can leverage a lot of the capabilities of a public blockchain, just by tagging transactions to it. So for sure, there's a lot of opportunity. It really depends on what your needs are, and what's driving it.
One of the biggest things we're thinking about and experimenting with is the role of metadata particularly around identity and who people are in different transactions, and how much data do we hold as a firm about our members. What can we post in the public blockchain? How do people interact with that data? And they're really open issues at this point. I mean, I'm not going to say it's exciting to experiment with, but what do we share? Again, one of the biggest opportunities for us with a public blockchain is the ability to share different views of the data with different parties involved in the transaction. But ultimately, are we holding metadata about those users as a firm, and how do we interact with the public data to share that? And when and how do we do that? And that's a really big open issue for us right now.
A lot of it depends on what you're trying to do with that information. If you're like Etherlock or a Slockit, and all you're trying to do is unlock a car door type thing, or something like Airlock that was started out of a hackathon in Toronto, and all they tried to do is like make a Raspberry Pi integrate with an Ethereum contract. If that's it, it's like one degree of oversight and privacy that's required. If what you're trying to do is work on the pharmaceutical side, on clinical trials, and provide analytics and information that way, well, you need a different degree of visibility and transparency. So I think a lot of it will depend on the context.
Right. As we start bringing things like electronic medical records or other forms of identity, I think those challenges will only become more salient. And a number of you have mentioned the word identity. I'd like to unpack this. Why is this distributed ledger a good thing for identity, and why is identity broken today?
I'll start, I guess. As you start to think about smart contracts interacting with other smart contracts, and you add in autonomous agents, you end up with DAOs, or distributed autonomous organizations. And they don't need a lot of management oversight, and they don't need a board, right? They kind of operate on smart contract execution. The problem is when those executions kind of don't go as planned. And I'll just give one example. Let's say that you purchased an innovative new age toaster, and you brought it home, and you thought, hey, this toaster doesn't do anything most of the evening, so I'm going to lease the compute power. So you lease the compute power, and you wake up in the morning and you realize that that the news reads 1 million toasters attack 7-Eleven, and you're kind of chuckling, thinking it's pretty funny, and then you realize, wait, Jesus, my toaster was part of that attack. How responsible am I? But I didn't really know it was contributing. So as we start to think about decentralized distributed systems, how they're non-deterministic, we kind of don't really know where they're going to go. So a lot of it, I think, is kind of up in the air, and we're not going to really find out until some of this time goes on.
So if you were a regulator, how would you think about this space? Would you see it as an opportunity, as a threat? How should regulators think about this?
Well, all right, go ahead.
I think it's a good opportunity for regulators. It's going to be, I think regulation is one of these considerations. If you're going to adopt blockchain, you have to take into account because it's going to make the adoption space more complex and how you get there. By the way, legacy systems are also a complexity that makes it hard to adopt. But what it could open up for regulators is the ability to see one consistent view of, say, a set of transactions. If you're auditing books or something, you could look at the same consistent view as a regulator that the member institutions have, right? And there would be really no dispute and no need to figure out, well, why doesn't this one agree with this one? And you get that nice consistent view right away. You get immediate visibility, so you can regulate, or you can monitor on the fly. It's not, you don't have to wait for some period of time and do it twice a year. It could be done continuously. I think advantages like that would be valuable.
Matt, maybe you can comment related to identity and regulation in a context like developing economies, right, where some of these problems are more extreme. Why is the blockchain a good device for identity?
Well, I think there's a fact that it was interesting. I was just reading about the campaign to get rid of the 500 euro note. And a lot of that has been going on in developing economies to get rid of large denomination bills, even to the extent of formally banning transactions. I think it's over $500 in Kenya. They want it all to run through RTGS, to bank transactions, to get rid of fraud. And it's a huge problem. And frankly, one of the challenges that others have had trying to do direct payments with mobile money and other things is it's somewhat transparent. I mean, someone can audit it. So financial regulators and even people inside governments who are trying to get rid of corruption have a huge incentive to digitize these transactions and move away from cash. Switching a little bit to identity, it's where there's no, a country like Uganda has no national ID system. In Kenya, it's fairly good. India has just rolled out over the past few years a national identity card that's now been adopted by 1 billion people. And it has a PIN and a private key associated with it. So there's some really amazing experiments going on at massive scale around this. When we look, at the US, it kind of dwarfs the size of it. But we're particularly interested in seeing how, with transactions over time, we can build up, I would say, more reputation than identity, kind of from the ground up. And there's some really interesting, the fact that someone has, again, a school is a very concrete example, which is why we started with it. You have lots of students where you can see, wow, this is really interesting. Lots of payments have been made for these students to this address that we know is a school. And even if we don't have great records about the school, over time we can observe that, these transactions are happening, people trust. Again, I don't know which version of trust that is, but repeated behavior that's had a predictable result without disclosing all the personal information, we can get to a very solid identity or trust that, yes, this payment address for this business or this school is very trusted. They deliver on what they say. So that's kind of the taking it to some logical conclusion.
Matt, that's a great point. I mean, when I think of identity, and it kind of reminds me of the unbanked, if we look at the US or the UK or Australia, 96% have bank accounts. When you start to look at China, it's 64%, and it goes down to 30% when you get to Argentina. So how do you get that bank account? Well, you have a driver's license or a social security number, but if you don't have those, hopefully you have a utility bill, but if you don't have that, it's probably unlikely you're going to get a bank account. So what are the alternatives? You go to some intermediary like a PayPal or a Western Union, and you transfer money that way. And then you kind of open up the whole remittance challenge, right? You're sending money back to your home country, it's taking a fee out, $600 billion a year, 7.5% is withdrawn in fees that are just wasted. That's almost $50 billion a year. So what does that person do? They try to send the money the best they can. And we're seeing, some benefits with, Abra working with American Express, where they're trying to come up with a payment network. And ultimately, their big vision is to have more tellers globally than ATMs. And when we look at Western Union, it took them 150 years to come up with 500,000 agents, essentially, and Abra will have more than those tellers by the end of the year. So I think a lot of these different tools enable citizens around the world to have better access and quicker access to some of the resources that they need.
So I'd like to move into applications and hear a bit more from all of you. What are your favorite kind of forward-looking uses of this technology? We have a question coming from our audience related to application. Can the blockchain be used for patent or copyright applications? Does anybody want to take a stab at that?
Yeah, I mean, definitely, absolutely. These are things that require something to have happened, a note of record at a certain time. Absolutely. So anytime you might have taken a patent, written it down on an envelope, mailed it to yourself, and not opened it, saying, okay, that's a date stamp. That's exactly the same kind of thing. That's definitely ripe for usage here. I don't know if I'm so locked in the finance world. I'm so interested by what you can do with finance that the things that are most interesting to me are things that you can do with contracts. The ways, for example, that you can look at something like escrow, which was somebody that you would trust, and a dispute resolution service, and maybe some other things, and how that just unbundles that. It turns it into, you just make a contract, you pay for the property moves hands, and that's it. And most of the time that works, and there's no problem. But every once in a while that goes south. It's a lemon, whatever. This is the first time that you should be bringing a dispute resolution service into the whole game here. So why in the world would we bring that dispute resolution service into 100% when it's only maybe 1% of the transactions that we actually need it? Why do we have to trust an escrow agent for 100% of all the money ever in escrow versus just letting the contract do it? We can make a system where the escrow agent cannot steal the funds. That's really, really interesting, both technically in the way that it works, but also what it means for the way the system is going to look within next couple of years.
There's a lot of really cool applications. I mean, you can look at Factum and Epigraph with what's happening in Honduras with documenting undocumented, trying to document the 60% of undocumented land. You can look at Monograph and some of the other Artsy, I guess, which is Artify, which is more focused around titles and documents like that, or even like one name that allows you to kind of get your unique block ID and kind of tag essentially anything you want. So part of it is trying to figure out what that use is that's going to be sustainable, that business and IT leaders are going to be interested in to really inject into their operations to say, okay, here's how I'm really going to use this. We're seeing some cool examples. Ultimately, somebody has to have the courage to adopt it in and take that risk.
Simon?
Sure. I mean, I could think of a couple. One, I'll come back to sort of the permission space. One that I think is interesting is these bilateral transactions that happen between financial institutions right now, and I'm no expert in the finance space, but it seems like those are sort of ad hoc, like these institutions make an agreement, they each record it in their own database somehow. It's not in any kind of systematic format. And so bringing in a permissioned kind of blockchain there to aid in recording those between multiple institutions would be great, right? You could have a common record that everybody agrees is the common record. It would be permanent and immutable, the great features of blockchain. It would be auditable. It would give these if you wanted it to be. There's I guess regulated and unregulated versions of these. Maybe you go after the unregulated first, just because it's an easier on-ramp. And then it would give the institutions a good global view of the history of these as an asset trail or a ledger, right? They could go and do risk analysis or whatever they do, right, on these. And I think that would be that's one application I think that would be good.
I'm most interested in giving people a global financial address. I mean, we all have credit cards in our wallets that can only be used to pay but not get paid, which, just thinking about the flexibility that this has for people to engage in financial transactions and also have some control over their personal data. I mean, as this grows, I think it's a really critical problem. And that's, if we can do that, if we can give, and one of the things that's really great about that is it's much easier to adopt an address than a bank account, some of the things you're talking about. And we can start to build up rather than going in with something like a bank account, which takes a lot of work and requires a lot of infrastructure, even on the bank side, and a lot of cost to administer, starting with something that's actually relatively lightweight that can really scale, but can then grow in value, both from the data that it generates for things like credit reports and lending, but also that carries with a person throughout their life and that they can control and use, again, both to pay and get paid.
So an identity, when applied to goods, services, transactions of different type, becomes really relevant for supply chain provenance, which is, I think, a problem that many of the people in the room are thinking about. Would you like to comment on why blockchain could be a player in this space?
I think supply chain is a great application of blockchain. So just to maybe make it personal, right? If you go to an online retailer today and buy something, you get a tracking number. You can see the package gets eventually shipped, it goes on a truck, it goes through a distribution center, another truck, and finally ends up at your door. You can see that whole chain. So imagine if you could see that for the same product, but you saw it all the way back to the raw materials, right? They're mined somewhere, they're turned into iron or steel, they're manufactured somewhere, they go on ships until they finally arrive somewhere, right? So you can see that whole chain of where they go. You can apply it to food, like so your grocery store or restaurant, next time there's an E. coli outbreak somewhere and you want to figure out what's the common link between the guy here, there, all over the country, right? What did they eat and where did it come from and how do I find the source of it? If you had this kind of a database, it would make that problem much easier to solve than it is today.
And
Totally agree.
I'd like to push you a little bit on that. Why can we have this today, right? So why do we need a blockchain to the parts of a 747 are tracked into a similar database across multiple suppliers?
I think the challenge today is that we're moving through a lot of different companies, right, in this chain. And you could do it today, but it would take a lot to push all these companies to adopt the same kind of a centralized database. Somebody would have to run it, right? It's a good application for blockchain because you really want all these companies to be able to interact with it on their own, right? And because the guy who manufactures steel or something, right, is going to deal with many customers downstream. And so he doesn't want to deal with 100 different centralized databases, right? So he wants to deal with one. And so blockchain gives you that ability to have all these disparate parties. They're not trusting, right? It's really kind of the perfect, it fits all the criteria Anders mentioned earlier for why you would use a blockchain.
And I think this really opens the concept of a standard, right? So what you're talking about is essentially a very interoperable standard, almost like a new protocol added to the ones we are very familiar of the internet, a protocol that can transfer value or secure information in a very reliable way. So when we think about a standard, I know there's a number of consortia from different banks, but also like startups are trying to push their own models for this. And at the end, we do have something that looks a bit like a standard. It just comes with not the best branding, Bitcoin, mostly because it's been used in illegal markets online, and it has a couple of use cases that regulators tend to not really appreciate, I'm sure. So how should we think about the Bitcoin versus blockchain in general, and the value of having a standard in this space?
Well, the value, I think, that's really the difference, right? The fact that this is an open standard that, why wouldn't we build that database with, I have a Postgres instance, you have MySQL, whatever, and we just interoperate with an open standard. But, at the end of the day, and this is your point, you're basically saying, well, it's also open. So after I integrate, now the information is available there. Yeah, I don't know.
I'll jump in. The Internet of Things kind of brings out the ledger of things. So in order to be able to have some of that connectivity, they really have to be able to identify those objects, right? And I think that part of it is kind of leaning towards a standard of identity that allows those objects to not only autonomously identify each other, but if you don't know where that object is or how to access that on a production floor or a manufacturing floor, it's not going to be that useful. So part of it is trying to move a little bit towards interoperability, and a lot of that is centering around a standard.
And related to the standard, where do you think there's too much hype right now? Where do you think the press and even experts in the field are talking about things that will really take a long time to deploy. And nobody's going to quote you on that. So.
Go ahead. I mean, a lot of it's the challenges, right? The real challenges of what it takes to get blockchain up and running, and probably like the biggest one is really not technical. It's like organizational alignment. It's how companies are really going to figure out how to really use this. And probably a fast second is like education, just trying to bring the level of knowledge across the organization up to realize that there is even a benefit. And then we talked a little bit about this earlier with the whole legal risk, but most CFOs and controllers and general counsel are comfortable with the level of contracts they have in place and how they're run and why they're written a certain way, not self-executing smart contracts. So I think that's going to be a challenge. And then kind of directly to the Bitcoin challenge, when you think about some of the other things with having a digital currency, and then now you have this address and there's no password recovery. If we think about the typical help calls that come through a help desk, a lot of them are, forgot my password, where's my password? Well, it's gone. Your currency's gone, or your access to your data's gone, or basically it's not accessible. And I think that's going to be tough to help educate consumers on how they're really going to navigate that.
I would throw out a couple more. I agree with those, but I think there's also there's a lot of hype around. Let's figure out. Let's look at all the places we could possibly apply blockchain. I think it needs to be a little bit more toned down to where should we apply it. Where does it really come and add value that today's technology doesn't, right? And there may be some places that just need to upgrade to today's technology too and take advantage of what is there. And then the other piece is that there's a lot of legacy systems that would have to be migrated to adopt blockchain in different spaces, and that's just going to take time and money and motivation, and probably is not going to be easy. It's solvable, but there's work there.
A problem we think about every day, and you could even apply it to the supply chain question, is if one link of the supply chain didn't post the transaction to the blockchain, you'd lose the value of it, or you couldn't recover it at the next step if it was skipped. And the same is true for credit reporting or other applications in finance. We have to figure out what the real concrete incentives are for people to start using it and start posting their data, and how they interact with it. Like, does it happen automatically? We've even experimented with posting transactions that happen in cache, where we're doing the data entry, if you will, to create the records, but we don't have to change people's behavior on the ground in the meantime. It actually gives them the same value of, like you have in a credit report of this person made this payment on this particular date, and that's durable and it's distributed across the network. So the person's still getting the same value, but we certainly didn't complete the transaction with Bitcoin. So those are the kinds of things we're experimenting with. But it's really if you have all this wonderful data out there, you can do wonderful and fun things with it, but until you get the data posted, and those barriers are the kind of stuff that you deal with every day on adopting of any new technology.
So we're getting a lot of questions through the Twitter feed, so why don't we open it up to the floor? We have 2 mics, so feel free to reach a mic and ask a question directly. We'll use the rest of the time in a much more interactive way. Please.
Can you hear me? Okay. It sounds like from your discussion that we have a nice technology, very powerful technology, but no application for it. We don't have a problem for it, and we're looking for a problem that we can solve rather than being invented for a problem. So could you guys comment on that?
Well, that's not true for me. But ignoring that, that's what happens when you get something that's very, very overhyped. And it seems to be the solution for everything. It's hammer searching for a nail, for sure. But in my case, and in the case of Circle, this permeates absolutely everything we do. We build an entire system upon this. And just to touch back on the question about regulators. Regulators think this is fantastic. This is the greatest thing in the world. We can see where everybody, where money comes from, where it goes, how much, how often, all of this kind of thing. And you might say that you could put it in a coin joiner and obfuscate, et cetera, et cetera. Turns out computers are excellent at figuring that out. So for us and for society who has elected these regulators to make sure that things don't go bad, this is fantastic. This is really changing everything.
go on the other side.
So recently, Estonia has made a bunch of announcements about their willingness to adopt blockchain technology for a whole bunch of things like land records and titles and so forth. And they're partnering with some companies to do that. The question for you is, what do you think the biggest obstacles are going to be for them, and does this really have legs?
I mean, I'll jump in. For Estonia, I mean, there's such a digital economy. I think their challenges are not going to be the same as the challenges in, say, the U.S. for adoption, right? Because you have a stable currency for the most part. You don't have crazy hyperinflation. A lot of the challenges that they're probably trying to solve, you know, they're so digitally advanced that they're probably pretty atypical in terms of a sample population. So I don't foresee any major challenges. I mean, already, I think 95% of all their, you know, medical electronic records are online, and, you know, all the, you know, citizens have ID numbers and stuff like that, which is not the case in the United States. So
Okay.
All
I don't think they're going to have a lot of huge obstacles.
So the ability to keep records, I don't know for how long, but I wonder about regulation and corporate policies such as data retention. Any thoughts on that?
Well, so how long is generally forever. So that said, you're not going to keep absolutely everything. So you're not going to put absolutely everything onto the blockchain because it doesn't make sense for absolutely everybody to have a copy of absolutely everything. So generally what you put on the blockchain is a hash of something that exists elsewhere in its full form. So you can prove that you had it at this point, but doesn't necessarily have to be the entire thing.
I mean, Andrews is absolutely correct. The data isn't going to get stored on the blockchain. So it's going to get stored on some other third party, you know, Amazon or something else. That verification will require a hash to kind of unlock that information. So it's more of like a control, almost like an access control, to be able to get access into the data. So a lot of this typical stuff that you're familiar with NIST and others that already control the level of access to information can still be applied.
Yeah, so you can generally think of this as a giant time-stamping machine, right? And there's different use cases for that. Please.
Yes, the focus has been mostly on finance. My question perhaps directed to Peter. On healthcare, electronic health records, how is that hash applicable? And also, is there an example that you might be able to articulate?
How is the hash applicable? So I'd say, you know, one of...
Electronic medical records.
Oh, and EMRs? Okay. So I think probably the easiest case is going to be generic fraud. But ultimately, as you know, you start to have patient-centric care, the patient's more empowered. At some point in the future, I hope I'm still alive, the patient will own their own data. And as we start to move towards that, then what you're able to do is have essentially kind of like a third, you know, somebody providing information, and you're able to kind of throttle that level of information of access that you provide to your physician, to your doctors, to you know, emergency driver, right? And based off that conditional access, and maybe it's a multi-sig where, you know, 2 out of the 3 need to validate, like your significant other and a doctor, or a significant other and an emergency doc, or something like that. Some level of that hash will ultimately live on the blockchain. The data will still live someplace else, and hopefully, you know, doctors start to centralize that information. So they publish up, they tag your name, and they give you access to that information, and then they publish up and something like that, as opposed to what happens now when you try to have portability. You really don't have portability. You know, you go to the next doctor, they have no records, no labs, no results. A recent test on it was like they didn't know what it was. You know, so hopefully some of that interoperability and that portability between providers will start to become, you know, a little bit less of a wall.
And this relates also, sorry, Matt.
Yeah, I was just going to say there's a project here at MIT called MedRec, which is experimenting with exactly that, using the Ethereum blockchain. I mean, they're not on the panel, but you could easily look it up and see some of the work they've done.
And there's applications to other forms of information. So you can start imagining new business models where the users is actually claiming their data back, and their data can be used or rented out or licensed in clever ways. So I think we'll see startups experiment with ways to monetize that data once it's back into the hands of the users. Please.
One of the core value propositions of blockchain is its security. How secure is it really compared to our current security mechanisms for transactions? And if it is more secure, specifically how and why?
So if you buy maybe an appliance or you have somebody writes some software for you that says, okay, the key is so big, it would take all of the computers in history, however many thousands or millions of years to crack this, you kind of hang your hat on that theoretical hook. However, the way blockchains work, they actually have an active attack that's happening at all times against them. They happen to take this active attack. It's a brute force attack that's happening across the network by all of the miners at all the time. What they do is they take this attack and they turn it into a benign force so that instead of attacking the network to obliterate it, they reward them with some financial gain from doing that and suddenly turn this attack into a benign thing. So how secure is it? Well, one way to kind of calculate that would be to say the price of Bitcoin right now is about $452 per Bitcoin. We know how many there are. The entire ecosystem, let's say, is about $7 billion. So there's a $7 billion bounty that has gone many years without being claimed. So that might be one way to measure it.
So, for example, compared to the SWIFT system, which recently suffered an incursion, are you saying then that Bitcoin is more secure than SWIFT, for example?
No. That probably makes me, most people don't like it when I say that, but no. I think the attack on SWIFT was one of basically taking a private key, stealing credentials, and making valid requests on the network signed by valid credentials. Same exact attack against Bitcoin, have the same problem. It's not a direct attack against the encryption. It's kind of a social engineering attack, maybe. I don't know.
So should we think of Bitcoin as inherently secure or more secure? I'm just trying to get a feel for what that part of the Bitcoin value proposition really is.
Yeah, for sure, absolutely. I feel like it is very much so because I've looked at the code, I understand how it works, and I sleep well at night. I think there's a lot of value to the fact that there are many hundreds of thousands probably people that have gone through this and understand how it works. Again, we're not hanging our hat on a governmental agency or a certain group of people. We're hanging our hat on the full faith and credit of math, of cryptography. And that works for me a lot better than a group of people. So, yeah.
I was just saying this goes back to the benefit of an open system. I mean, for us, when we look at this in environments where, people don't trust banks for very good reasons. I mean, everybody we work with has direct experience with a bank failure or fraud at a bank. We obviously need to educate people, just as you're doing. There's some real questions to get people to understand how it works and why it works, and where the vulnerabilities are with their private keys. But being able to have this sort of open source type validation that we can look at the code. I sleep better at night also.
I would also mention though that saving private keys is not something average humans can do.
Exactly.
Probably not even myself.
No.
It's tough. It's just a random number, but you got to remember it and you can't tell it to anybody else. So that totally did. That basically takes like insurance and turns the insurance industry on its head. That takes basically people want to have some way of securing this stuff, and I don't think most people know how.
And I think this really relates to the point that intermediaries are not going away. They're just changing in nature. So securing private keys, even generating a good source of entropy, right? How do you even get that good number to start with? Are new business opportunities for all the players in this space. Please.
Speaking about organizational challenges, I don't know whether this is on. You talk about electronic medical records. How do you balance the concerns of privacy with everybody having a digital ID, for example. We've seen the resistance in this country against real ID and against government-assigned IDs, even social security numbers. How do you deal with that challenge of kind of digitizing the world, in a sense?
I don't think we solved it. We're still working at it. When you look at Singapore or the UK and they, or even Switzerland, where they try to, like at least with Switzerland, they try to get a unique ID, like a universal ID. When it came down to the challenge with privacy, it didn't go anywhere. Ultimately, citizens said, we're concerned about our privacy. We're not going to adopt this. We're not going to vote for this. So I don't think there's a hardcore solution yet. I think part of it is going to be you're going to get pockets, like you're going to get different agencies within the government or local states that say, hey, we think we can believe this and we're going to move forward. Kind of like what happened with Estonia, right? They chipped away, and ultimately they're pretty digital. I think that's what's going to happen with us. The challenge with the healthcare system is it's so big and it's so complicated, right? Because we're special. But ultimately, it is pretty complicated. So it takes a while because of the heavy regulation to figure out how you're really going to eke out some value. So I don't think there's a really silver bullet there.
Yeah, so I agree. I guess sort of there's two pieces here. One is identity is a constellation. I might say that my license and my passport and many other things, maybe a Facebook account or Twitter, all of these things point to the same person and who the identity is. Here's a really interesting thing. Say, for example, I took my DNA and I made it available, and this is obviously very personal information. I make this available to medical companies or hospitals or whatever, to do research on, but I never want to let them actually know all of the information. I just want to open some little piece of it. So I give it to them in an encrypted form, and the contract that goes with that says you're not allowed to get to this unless it's in aggregate. So let's say 100 people or 1,000 people or whatever. How you can ask that question of 1,000 people, and I'll be part of that group, but you can never personally identify me. So there are ways to take your information, keep it in an encrypted way, have it acted upon in an encrypted way, never be decrypted, and then it's still encrypted. So even if somebody stole it, it wouldn't be useful.
But just like the discussion of private versus public blockchains, some of the benefits that you get from being public versus a private enclosed system go away if you put those restrictions on. So in some sense, it's a balancing, right, of how much you're going to reveal, how much does it trace back to an individual, what's the ID or what's the tag that you're going to provide people. Obviously, if everybody has a digital ID a la Estonia, there's a lot more you can do with it than if you have kind of a limited universe in which you're operating. So that, to me, that's
no, and in fact, this relates also to the broader debate on encryption, right? So I think we're seeing it unfold at many levels. So we're running out of time, but I'd love to hear the two questions. Maybe if you can go briefly on this side and then the other, and then we'll try to give you a quick answer before we wrap up.
Yeah, thank you. First of all, thank you for a great panel. And my question is about challenges with blockchain. And as we know that by design, the initial assumption that the system of miners is heavily decentralized. And today we see that for Bitcoin, a lot of miners there in the one region, in China. And do you see this as a problem, and what's the way to overcome this problem in the future?
So we have miner centralization on this side.
My question is around mobile transactions. There are many micro transactions using mobile in the developing world. So the micro transactions are very helpful, right? But how do we detect if there is any money laundering activities, right? These micro transactions are related to any money laundering activities. How do we detect that?
Great. So if two people on the panel want to take one mining centralization and the other one AML and in general, like KYC.
So I'll take mining centralization. It certainly is centralized a little bit more, but it's nothing compared to what it could be, right? What the alternative might be, for example. So mining is going to centralize around where power is cheap. That's happening, but it's it's still way more decentralized than other other opportunities.
And you should talk to our person at Intel here, because Intel has a clever solution for exactly that problem. Anybody wants to take AML and micropayments?
It was specifically around AML. I couldn't quite hear your question. AML for micropayments, was that?
How do we tie to the AML? You know, there are so many micro transactions, and then how do we tie to the bigger macro transaction that could be money laundering?
I mean, we have two strategies to address that. One is that we've been really deliberate about that, and working with schools was also a strategy around that. That we know we can, know who those people are, know who their relatives are, know that they're making a payment to the school. And the other one is another strategy around, doing lower risk transactions, again, like school fee payments, until we can build up these kinds of reputations and giving people incentives to associate, their real ID, if you will, with their payment address. So over time, we'll be able to build up a kind of multi-dimensional perspective of who those people are as they increase their use of the system. We haven't fully fleshed that out yet, but there's some really, there's some interesting ways if you can, given the data, connect all the dots, you can really figure out who people are. The other response is, people swap phones all the time, and even in countries like Kenya that have pretty strict requirements about getting a SIM card, you need your national ID or a passport if you're a foreigner to get a SIM card. Well, all you have to do is hand your phone to somebody. So I think we're already, have higher standards than the reality of what's happening on the ground. And it is going to be some real work working through governments so that they understand that, they have this nice, I don't know, fig leaf sounds pretty pejorative, but they can say, oh yes, everyone who has a SIM card has given us an ID, but of course people pass phones around all the time. So, it's 10 generations on of people reselling and passing on the phone. So what exists today isn't all that good, and I think we can actually, with some work and with some real cooperation, actually do better.
I'm sure there's many more questions, but we're out of time, so I welcome, please join me in welcoming and thanking again our panelists, and if you have more questions, just come up. Thank you.